So Manish Taneja, as you know, founder and CEO of Purplle, a Fund One company, 12 years now since he's been building it, 10 years in the Blume portfolio. Our latest unicorn, for what it's worth, wear the tag proudly, Manish. And Nirmal Jain, if anyone is ever invested in stocks, you probably know IIFL is a wonderful, wonderful homegrown story from scratch. Very quickly, Nirmal's, I think you started in 1995, Nirmal. So 27 years now, spawned a whole bunch of entrepreneurs with different businesses. And I think for people to understand what your journeys have been like so far, maybe Nirmal, if you can tell us, I think people generally tend to underestimate how much time and effort goes into building world-class organizations. Also underestimate the foundation that you need to build before this idea of compounding and the effect of compounding and the power of compounding kicks in, right? And so everyone expects that to magically happen all through, at least that's what all the venture capitalists think, right? And as entrepreneurs who have lived through 1+ decade, 2+ decades, if you can recount the points where you knew that this is beginning to work, what does that compounding mean? And what does that mean in terms of like end journeys? Like, you know, so how do you keep that momentum going for like 27 years? So we'd love to hear that story a little bit. Yeah.
So my company has been for 27 years. So I'm, like you talk about generation next, I'm generation previous. So it's a time when money was not so easily available. And when we raised $1 million in 99, it was like a coup. Because me and my co-promoter Venkat, we thought that $1 million for a startup like ours, which was 4 crores in those days, was a big thing. But I think compounding works very well, and although we hear so many stories about compounding, but still it's very difficult for human beings to really understand how the compounding works, you know. So, and there are a number of stories about this. The famous story you would have heard from that peasant, the farmer and the king, where king is very happy and wants to reward the farmer. He says, just put, and there's a chessboard there in front of the king. So he just says that you put 1 grain in 1 box and just keep doubling in every box, and you know, that's enough for me. So king thought that is a fool, but his entire kingdom could not pay for that. And that was, I think, the number of grains would be something the whole world will produce for 700 years. So I think compounding is very important, and what it means for entrepreneurs is to stay the course, don't try to jump, whatever be the parameters judging your business, because it used to be eyeballs in olden days. Now it's the number of customers, whether it's a DAU, MAU, whatever. So they try to boost up the numbers thinking that they're getting multiple of that. And then the story falls flat because you're not able to maintain the pace. And I think Einstein put it very nicely, that compounding is the 8th wonder of the world. Those who understand earn it, and those who don't understand pay it. So it requires patience to appreciate the power of compounding, but it works.
And in your personal journey of IIFL, so what were those points where you knew that, or even, you know, were you able to predict that what you had built from 1 to 10 becomes 1,000, right? So how do you know that as a young entrepreneur? Because it's very tempting to say that this rule will apply to me, but it's very difficult to stay that course, as you said.
So I'll be honest, see, what happens that today I can talk about many things that where I was confident one will become 1,000. But vision is, you know, 80% hindsight and 20% foresight. But I'll tell you the points when we almost kind of gave up. So from 1995 when we started, India was in a, economy was in a bad phase till actually 2000, then we were stock market dependent, so there was a Ketan Parekh crisis. So in 2002, we almost sold the company for $1 million again.
Wow.
That would have meant maybe that was again 4.5 crores. So I'm just telling you the reverse of it, and then I'll come to the points what you're asking. And that was actually, half of that would have gone in paying liabilities or whatever, and this was about 2002 end. 2003 markets recovered, so almost like 12th May 2003. So you look at, okay, Sensex was indicated in those days. So market was 3,000, around 3,000 from 1995 till 2003. And from 2003 to 2008, the Sensex went up from 3,000 to 21,000. So imagine we would have just sold it before the real boom, and it wasn't any vision or whatever. Actually, the buyer backed out. So that was how we survived. And the turning point when we really thought that we can scale up was, of course, when we first raised the, thank you, first round of capital in 99, but more importantly in 2005, when we did our IPO, which was a small IPO, some 15, 16 million, and there was a time when we knew that now we can scale up because we became profitable and the profits were growing. The online internet technology, we had done a lot of pioneering work that was getting acceptance. And then I think from there, we grew from strength to strength. It was a roller coaster, but it was never the existential threat because we had raised capital, we were making profit. So from then on, I think we kept growing. So we started various businesses. So 2006, our institutional broking, investment banking. 2007, we started wealth. Again, betting on the very young people in those days. So from then on, I think it has been just growing. So, I mean, there are times when things go down and up, but I think it was never, and I really never, to be very honest, I really never thought they'll become 1,000 times or 10,000 times. We just took one day at a time. Only thing is that we remained focused on our core competency, which was financial services, and we never digressed from that. So we knew that this is something that we understand. There may be bigger and better opportunities, but we'll remain focused on what we understand.
Super. No, always an inspiration, Nirmal. And IIFL has been a huge supporter in the Blume story. So grateful for the support and giving us that leg up as well. Manish, in turn, we then came and supported you with a tiny 1 crore check, 4 crore round 10 years ago. And after that, it almost felt impossible to convince people that you were building a good business. And you started as a small, online multi-product store, 5-6 years. People are still not believing. Yes, you did get 1 or 2 believers, and that's how you survived. What changed? Like, what took off? And, similar question to you. What do you think in these 10, 12 years were those critical points where, and how do you hold belief through that phase before compounding kicks in?
Yeah, so, we started in early 2012. Blume backed us in 2013. I think first 7-8 years we reached about 40-50 crores of revenue. As Karthik mentioned, we didn't have much backers. But I think something changed in 2008 where we started taking contra calls on what everybody else wanted us to do in our business versus what we thought was the right thing to do.
2018 you went.
2017, 2018. And by 2018, the business started to become very differentiated from competition, and that's when, it also was a year when we made money on EBITDA. And that's when sort of a lot of, investors got, they thought that we were building something different, and we started attracting capital after that. And yeah, so from 50 crores in 2017-18 to 1,200-1,300 crores in 2022, I think. Compounding probably kicked in after 2017-2018.
No, it's amazing. I think, we joke amongst the team that a lot of our Fund 1 founders were left for dead, right? So basically nobody wanted to believe that they can build very large companies. And it's almost like despite those odds, not because of those odds, you guys have all survived. So very grateful for having survived that journey. So which then brings me to the corollary of that question. How do you keep your key people until that point kicks in? How do you motivate all your stakeholders? And what does that baseline of an organization look before it takes off? Maybe Manish first and then Nirmal.
So for us it was easy. We didn't have too many people to keep aligned. We were barely 30-40 people in the office. I think 3 co-founders, we were pretty aligned. We always wanted to do this for the long term. We were more than fair to each other, all the time. And then we had a bunch of engineers who were always very excited about working on great problems. So I think it's easy to keep engineers excited even if the company is not doing well because they like to work on good problems. They don't care what financial outcome it is. But look, I think, I think it's been a lot of communication with the people. I can give you some examples in 2020 when COVID hit, and everybody was scared about, whether there would be layoffs or something like that. We were talking to our board every 2 weeks, and we were doing a town hall every week in the company where we were telling everyone that, look, there is nothing to worry. We have capital in the bank. Our people cost was still very low, and so we could have survived probably for like 10 years or so if like COVID were to stay that way. So yeah, look, it's over communication. We've been good at, I would say, ESOP-based payouts to people. So if, lots of people at Purplle have made like tens of crores, and, they're still in the system. One of the other things that I think is perhaps true about us, I mean, much like it is true for Blume for sure, is we've been nice to a lot of people. And so we ended up buying 5 companies, small, large, over the last 5-6 years. Each of those founders has stayed with us, and that's like a privilege, that we've had. But yeah, look, that's all helped us in compounding, and it's just been fair and prompt communication.
Nirmal, any anecdotes from your journey? Like, what makes these people stick? I mean, and you need that sort of organizational muscle to be able to withstand all these shocks, right? And it's easier said than done. I mean, now I think venture capitalists come and spoil that journey a bit by throwing too much money at the problem, asking for incredibly fast results, which are not necessarily viable all the time, and there's massive pressure, and we've seen that destroy companies. Maybe you had the luxury of not building with that pressure, but any tips from your journeys or any anecdotes from your journey?
So I think it's a very interesting question. So from my experience, ESOP or equity is just the starting point. But when you hire really bright people, they need freedom and intellectual freedom and freedom to experiment, freedom to make mistakes. And only in times of crisis or challenges, again, you have to keep calm and try and solve a problem rather than get nervous or get into a blame game. But most importantly, I think the freedom and the autonomy is very important for the really bright people to work. Because if you're looking over their shoulders, and there will always be certain things you think can be done better way, but if you, lose your patience and get into that, that basically won't allow the growth. Actually, there's a very nice book called The Speed of Trust. So when you have a mutual respect and trust, then you don't really, second guess or try to evaluate or validate every decision, and then things move very fast. Suppose you have family concern, you have 5 brothers, and you don't have to look at each other's things, it's 100% trust, then anybody is taking any decision, whether to launch a new product, take a new office, hire people, you don't get into those nitty-gritties, then things move fast, and that is what is the key thing. Only where you get in is when things are not moving or you are getting, somebody getting impatient. There's a time you have to say that, okay, okay, let me put it this way. We started our wealth business which has been very successful, but we never set any targets. So it was never that we need to achieve 10,000 crores or 1 lakh crores. It's only that we need to do our best and just see what we achieve. And maybe at one point in time, we just look at 1 year ahead and keep building our business model. And of course, when we build our business model, we know that we want to build it for long term, even today.
Yeah.
So I think that is very important to, in my opinion.
I think, again, your wealth story is an amazing example. I mean, literally, I think he bought companies. You're not bought, but you encourage people to come and join you in your journey. And each of them independently went and built $1 billion+ business, right, as your wealth team has done. Specifically, I mean, just looking forward and looking into the future, if you assume that this compounding game continues, the belief is, and I would love to hear your thoughts whether you agree and how large these businesses can become. All of this has been managed with very little resources, very little spending power relative to what, let's say, a Western market might have used to build, right? And we are at the cusp of like taking off as an economy. As an incumbent now, because you're number 2 player in the country in your space, I don't know whether the ranks in your space, but you're a very formidable, profitable company. Can you imagine that these companies could easily be 10, 15, 20 times the size that they are today, 10 years from now?
I think should be very easily. So what happens is that if you compound at our size, will be anywhere from 15 to 25%. So then you become 10x in 10 years' time, which itself is very good. So, sometimes people think that you should double, and absurdity of doubling is in that 64 pieces checkboard, that if somebody starts doubling from the age of 20, by the time of 84, he'll have world's economy into a million times, so which is obviously impossible. So I think compounding at a pace which is reasonable. We know that the economy is growing at a nominal rate of, Dheeraj mentioned 12%, so 12 to 15%, you can grow at 20, 25% in our kind of businesses. So, there are different businesses. But easily, I think, 10x in 10 years, what we say 10x in 10y is quite feasible.
That's in his business. What do you think in your business?
Yeah, I think given our scale is, I would say, still much smaller, I would say 20x in 10 years is quite feasible. I wouldn't be surprised if we would be like a $20 billion company in like 10, 12 years. Yeah.
I would love to see that, and please give that wealth to retail investors. And Manish, we wish you an incredible journey for however long we stay as institutional shareholders, but I would love to buy the stock personally if we ever sell as an institution. And last, parting words. I know we've run over, and thanks for your patience today. What advice for founders who are starting off, like you saw some of them, they're brand new in the portfolio, first startup, in their 20s. What mistakes should they avoid making and not fall into this trap of FOMO and looking at your peers and trying to catch up on valuations? Sadly, it is peer pressure, right? And if we didn't have that, we wouldn't have too many busts in venture, I would argue. But that's the nature of the game. So, but fundamentally, we don't believe that in Blume, but it's not easy to keep that balance with every founder. So any tips from you before we wrap up?
I think humility is very important because if you're humble, you'll be able to course correct much faster. And generally, I say the 3 H are important, however bright you are: hard work, humility, and honesty. And there's no substitute for that. So don't forget those values.
Thanks, Nirmal. Manish?
I think my advice would be build responsibly. It's okay if you're 1 year behind somebody, it doesn't matter. I think you're not running a race against somebody, you're running it with yourself. If you want to build it for next 20 years, at least how we want to build it, I think don't worry if there is 1 year that goes by when you didn't do very well. I also think, there has to be compounding of trust, like how Nirmal mentioned. Also, if you play the game, I would say a little bit more responsibly over many years, there's a lot of serendipity that kicks in. I met Adia here 2 years ago. They're our shareholders now. Some of our best mentors, I've met them just serendipitously. So, look, I think just build responsibly, I would say would be my advice to everybody.
Lovely chatting with both of you. Thanks a lot, Nirmal, Manish. I hope everyone takes the advice. Fantastic founders to aspire to.